Hey guys, how you doing? My name's Kent Tilley with K4 Financial, and if you're watching this video, it probably means that you are having some financial difficulties, and I'm sorry about that. What I'm trying to do today is teach you as much as I've learned in the last little bit about filing for bankruptcy and potentially doing a consumer proposal. Sometimes there are other ways out of this. I'll kind of talk about it at the end. There is a lot to get into, and I am not a licensed insolvency trustee. I have never helped anybody file for bankruptcy. I can't do it. So this is not my area of expertise, but I can share with you the information that I think you'll want to know before you go down this path. So hopefully you learn a lot. If you do, the best way to support this channel is just to hit like or subscribe or comment. We like nice comments. Don't really love when people say mean things to us online, but we're kind of used to it. So I'm going to get into the beginning. Like I said, I'm not a licensed insolvency trustee, and that is the only human being that you can go through to actually file for bankruptcy. There are a number of companies, and each province is different. So you're going to have to find one within your province that actually can deal with you. And I'll talk about just Alberta's today, but every province has different rules for what you get to keep and what you have to give up if you go bankrupt. So I'll just give you an example of Alberta. And the one thing that I've sort of learned in this process of learning about this is that these licensed insolvency trustees are probably the best regulated sort of in the financial service industry job out of all of us, which is amazing. Thankfully, there is at least one that's really well regulated. They can't gouge you. They can't make more money than they should. They have to give you the proper advice, and they're going to be very helpful in this process. So the best thing about bankruptcy is that it straight up just provides you with immediate relief from all of your excess debts. So that's great. You go, you file for bankruptcy, you no longer have credit card payments, you no longer have these car loans, you no longer have a mortgage that you can't afford, you no longer have all these loans or creditors calling you. They can no longer call you as soon as this happens. All of that is off the table, and it's not going to cost you nearly as much to do this as it is for you to try and pay off these loans and these debts. So that is great. And so we'll get into the next part, which is that you will not lose everything, which is a nice thing about bankruptcy. All right, so I'm actually going to have to read you the list of what you aren't going to lose, and we're first going to start with federally. This is what you're allowed to keep on a federal level, and then we'll get into Alberta because it's a little bit more specific, and each province is fairly similar with this, just the numbers are a little bit different. So you get to keep, food, fuel, clothing, furnishings, appliances, medical aids, a car, your home, tools of the trade, things that you need for work, but sometimes there's a dollar limit on what you're allowed to keep. So this also depends, like I said, on where you live in Canada, but you are going to be able to keep all of your RSPs, all of your RIFs, all of your deferred profit sharings plans. You're going to get to keep your pension. That is not going to go away. That is your pension. Any RDSP, Registered Disability Savings Plan, all registered education savings plans, and you can actually continue to make contributions into the RESP and it won't be deducted. Now we'll get into Alberta. Just for Alberta, this is some of their specific rules. So you're allowed to keep the necessary clothing that you need, food for you and your dependents for up to 12 months. You can retain up to $4,000 in home furnishings and appliances, all medical and dental aids, a motor vehicle valued at $5,000 or less. I'll get into the details of that a little bit more in a second. tools of the trade up to $10,000 worth. You get to keep your home if you get to keep $40,000 of the equity in your home. So let's say, for example, you have a $300,000 house and you don't own more than $40,000 worth of it, then you get to keep all of that money. If you own, say, $50,000, but you want to keep your home, then you have to pay $10,000 to get you to that $40,000 limit, and then you get to keep your home. You don't have to get rid of your home. It's the same thing with the car. So if your car is worth $10,000, you're allowed to keep a $5,000 car. So if you wanted to keep it, you could pay $5,000 to keep your car. Not sure where you're going to find it potentially, but that is one of the ways that it works. So you do get to keep these things. I think maybe they should increase the value of a car, because I'm not sure where you're getting a car for less than $5,000 anymore. If you're the recipient of a social allowance, handicap benefit, or widower's pension, these should be exempt as long as they're separate from your other funds. Like I said, RSP and RESP, and a number of life insurance policies are exempt. So you do get to keep your house, you do get to keep all of your major assets, you do get to keep your retirement accounts. These things are, they're not trying to ruin your life, they're just trying to, pay back some of the debts with what you do have. The other thing that I want to talk to you about is that filing for bankruptcy is not going to affect or impact your spouse or partner as long as they aren't a joint holder on the debt that you have. So if, that's your credit card or your car loan, then that's fine. However, if you are co-signed on that certain debt, then they will have to basically file for bankruptcy with you as well. So in that case, if it's just one spouse, that's kind of good, because the other might be able to keep a better credit rating for later. This is obviously something that you're going to talk to your licensed insolvency trustee about. Next question, is there a cost to filing for bankruptcy? Yes, there is a cost, but it's not that big of a cost. It's actually $1,800, which is going to be paid back in $200 installments to your licensed insolvency trustee over the course of the 9 months that it's going to take you to get discharged from your bankruptcy. So generally speaking, this takes 9 months. I'll talk about a little bit more about the details of how long it takes, but in most cases, unless this is your second time filing for bankruptcy or you have too much surplus income, then being discharged from bankruptcy is going to take a little bit longer than 9 months. But if you're under that threshold, then you have 9 months to pay your licensed insolvency trustee and 9 months to pay any extra costs, and then you're discharged from your bankruptcy, and that's where you can start building your credit back up again. For a consumer proposal, the immediate cost is $1,500 plus 20% of the future payment. So a consumer proposal is where they're going to go to all your creditors and say, we are putting together a proposal for this person to allow them to pay their debt off over time, a loan of up to 5 years with 0% interest that is going to be lower than what you're paying. And now you have 5 years to pay that back. But the licensed insolvency trustee is going to take 20% on top of those payments as payments. Now, how do we calculate these surplus payments? Because that is a big question. This is kind of hard to find out, but I did finally find out how to calculate your surplus payments and what the limits are on your surplus payments. So when you file for bankruptcy, you are allowed to make X amount of dollars that basically allows you to live. And if you make above that, then you have to pay a portion of that to the licensed insolvency trustee or whoever, whatever, I don't know who's getting this money, probably the government or your creditors or something like that, for X amount of time, and then you'll be discharged. And so your bankruptcy discharge can take longer to happen if you are making too much money, but it's not that big of a deal. So the way that it works is you have your net monthly income, so that's like after taxes, this is coming in based on the number of your family members. So after tax, let's say you got paid $4,000 after tax, you're left with $3,000. That's your net income. Now you're going to multiply your surplus amount. So I'll talk about this in greater detail in a sec, but so you've got $3,000 a month, and let's say that the surplus amount, that your threshold is $2,500. Now you have $500 in surplus every month that you're making. So they're going to take 50% of that, and you have to pay that to the creditors for X amount of months until you're discharged from your bankruptcy. So in this case, you know, this example, and I should have used this example instead because it's written down right in front of me, is that this person makes $2,500 net, and they're allowed to make $2,355 per month net. So they have a surplus amount of $145 per month. So times that by 50%, now you're left with $72.50 that you owe in surplus payments. Ryan's going to throw this fancy graph into the video, and we're just going to talk about it. So this is totally dependent on your family size. So in 2023, it starts, one person can make $2,543. Anything on top of that is a surplus payment. If you have a family of 2 people, that number goes to $3,165. 3 people, $3,891. 4 people, $4,725. 5 people, $5,359. 6 people, $6,044, and 7+ people in your family, which is insane, you can make $6,729 before you start having to pay into surplus payments. All right, so this surplus gets into how long you are going to be bankrupt. If you do not make surplus income, then, and this is your first time filing for personal bankruptcy, then this is going to last for 9 months. As soon as that's done, as long as you've fulfilled your duties, because there are some that I'm going to talk about in a second, then you will be discharged from your bankruptcy in 9 months. Now you no longer have anything to do, and your only job is to build back up your credit rating. If you have surplus payments and it's your first time that you've ever filed for bankruptcy, then it is going to take 21 months. So you are going to have to make these surplus payments for a year and 9 months, and then you will be discharged from your bankruptcy. If it's the second time you've been bankrupt, then, and you don't have surplus payments, then this process is going to last 24 months before you can be discharged. And if you do have surplus income, then it will take 3 years until you can get into the phase of being discharged and building up your credit rating once again. All right, so the big question is, that's how long you're going to be bankrupt for, but then everybody says, yes, my credit is going to take, forever to come back because that bankruptcy is going to be on your file for however X long. And so everybody always says, well, it takes 7 years until this happens. But what it actually is 6 years after you've been discharged from your bankruptcy. So in the shortest case, it could take 9 months plus 6 years. So 6 years and 9 months. Now you no longer have that bankruptcy on your credit rating. But if it's your second time bankrupt and you have surplus income, That takes you 3 years to become discharged from your bankruptcy, plus 6 years on top of that. So that will actually take 9 years to get that off of your credit report. In any one of these cases, your credit is going to be bad. If you're not filing for bankruptcy, you're still going to have bad credit basically until you get all of these things paid off. And if you take a consumer proposal, for example, and you have to pay this stuff off over 5 years, well, that's also going to be on your credit rating for 5 years. So in every case where you're in this situation, the credit isn't really that big of a deal because you're just building it back up, but you're in a better position. So you don't have all this stuff. You still have your income coming in, but you no longer have this debt load that's causing you extreme anxiety, ruining your life. Now you actually see light at the end of the tunnel. Who gives a crap about your credit rating? The only thing that I worry about in this case is making sure that if you're going to do this, and I hope, and I'm sure the licensed insolvency trustee will talk to you about this, is having a place to live lined up before this happens. Because maybe if you're renting, now all of a sudden your landlord sees that you have a bankruptcy on your credit rating, they might not allow you to get into the building, which I think is actually probably the opposite of what they should do, because you're going to be in a financially better place than most people that have these extreme debt loads that are in sort of the lower tier of Canadians that are just burdened with extreme amounts of debt right now. Sorry, I'm sort of all over the map here, but I'm trying to get all this stuff in for you guys. So I said that there was some responsibilities that you were going to have, and the main responsibility that you have is that you have to pay your licensed insolvency trustee and that surplus income for the stretch of time that you need to pay it for. But there's also a couple other things that you need to do, which are not that big of a deal, in my opinion. I think these are actually great things, and they're coming at you with no cost. So you've paid, $1,800 to your licensed insolvency trustee, and this is also what they're going to do for you. You're going to attend 2 credit counseling sessions with your LIT or a credit counselor, which will help you manage your finances and rebuild your credit during and after the bankruptcy process. They're going to give you some good tips. They're going to teach you how to manage your money better. And you're also going to need to provide your LIT with the appropriate information so that he or she can file your taxes on your behalf. So now you've got a free accountant filing your taxes on your behalf. That's sweet. And lastly, I'm going to talk a little bit about the consumer proposal. Now this is where you're going to go to the LIT with all of your debts. These are the only people that can do this. As soon as you do this, you are going to consolidate every single piece of this debt into one loan between 5 months and 5 years. Can be up to 70% less than you owe. So they're going to make your payments lower, but you get to keep everything you have, and all of a sudden you immediately have creditor protection. You can no longer get calls from any creditors because you are legally protected from them now. You get to keep all of your stuff. You do not pay interest on this loan, which is great. And it is basically one of the best alternatives to bankruptcy, in my personal opinion, and I'm not a professional bankruptcy lit guy or whatever. Sounds to me like bankruptcy in a lot of cases is actually better. But if you really want to keep every single thing that you've spent all this money and wasted all this money on, then you can go with the consumer proposal, because I figure in a lot of cases, some of us have just maybe bought too much garbage, and maybe we need less of it, and we need to learn to live with less. So that is sort of my thought on that. And with bankruptcy, you're sort of just relieved of that past financial life where, You know, maybe something bad happened to you, maybe you made a mistake, maybe you made a bad investment. Whatever happened, you get a fresh new start. It's amazing. I think it's good. Everybody that I've talked to that's done it felt that way. So I talked about that in the last video, how much better their life was once they went through with this. And what I just want to end with here is that I do not want you to feel ashamed or embarrassed about this in any way. Because guess what? Money is really hard. Canada is riddled with, personal debt. Our cost of living is very high. Sure, maybe boomers, you're telling us that we were really bad with money and you guys were the best with it. Yes, you guys were good with money. You probably didn't buy as much stuff as us. However, our lives are way more expensive compared to what we make. And that is obviously not easy for the average Canadian to deal with. Sometimes you make a bad investment, whatever, that's not your fault. That was a mistake. It could have worked the other way because it has for other people. You just didn't get the timing right. And when that happens, that's not your fault. That's just like it's not that person being the greatest investor that had the opposite thing happen to them. So you do not need to be ashamed about this. I just want you to reach out and get help from somebody. Like I said before, I said, we would do the $500 or $750 financial plan for people that were considering filing for bankruptcy. And I said, well, one of two things is going to happen. We're either going to find a way to get you out without filing for bankruptcy or doing a consumer proposal, or you are going to file for bankruptcy, and then all of a sudden that $500 or $750 that you put on your credit card is wiped off your plate anyways, so it was actually free. I might rescind my offer there on that and just say, maybe just go straight to the licensed insolvency trustee. Yes, we can talk to you, but these people know way more than we do, know way more than I do. All I'm going to do is have a conversation with you about kind of your feelings, and then you're going to have to go and get the actual facts. So if you want to have a conversation with me about your feelings for $500 or $750, that's fine, but maybe just go straight over to the other side, and if they find a better way, then we'd certainly be here and happy to help you move forward and build that back up. And so, thanks again for watching. If you are in this situation, I'm sorry to hear that. Please like and subscribe again, and I hope you find an easier path forward. So, cheers.